How would you characterize what is happening here? Is this a strong market or a slowing market?
That's a great setup. It's actually both right now. So it is slowing from being very strong. So now we're just at a strong standpoint. We've got a very large number of young households, the millennials that are in peak household formation years. There's more than 45 million of them. And that's been the case for the last few years and will be the case for another few years. So it's a very strong segment of homebuyer demand that is sensitive to things like interest rates and home prices, but is still going to be pretty resilient. People buy homes when it's the right time in their lifetime, especially when we're talking about owner-occupied home purchases. And so I think they're going to get creative and find a way to navigate these challenging economic conditions and still find a way to get their foot in the door, especially since, as Mike mentioned, rents are rising and are expected to continue rising. So they're going to have to live somewhere. And renting is also a costly option. So I think that's going to keep housing demand relatively strong, even in the face of some serious challenges.
Danielle, where are we in terms of overall affordability when you combine things like personal income growth with rising interest rates and rising house prices? How does the current landscape compare to, say, pre-pandemic times?
So home costs are taking up a bigger chunk of incomes. That's true for both mortgages and for rentals. Rising incomes are certainly helping, but it's not enough to fully compensate for the 1-2 punch that we're getting from higher mortgage rates and higher home prices. If you look at the most recent data, according to Freddie Mac, mortgage rates just crossed the 4% threshold for the first time since May of 2019. That means between higher home prices and higher mortgage rates, mortgage cost up $340 for a typical buyer. So that's a lot. It's roughly split, half driven by higher rates and half by home prices.
What do you think the effect will be from now if we keep seeing rates going up? Say we go to 4 to 5%, 5 to 6%. What does the market look like if we continue to see higher rates? The Fed is certainly still talking about the idea that it's going to hike significantly from here. The market has already, to a certain extent, front-run that. But is your expectation that rates will go higher? By how much? And what impact do you think those even higher rates will have?
So I do think mortgage rates will go a bit higher, but not as high as the Fed funds rate will go. Because as you mentioned, mortgage rates have anticipated these increases. This was perhaps the least surprising Fed rate hike in history because Chair Powell essentially told everyone what he was going to do before they did it in this case. The Fed telegraphed their intentions very clearly. The market has reacted, and so we've already seen mortgage rates run up. I expect we could see maybe 4.5% or so by the end of the year, but mortgage rates are really far ahead of the Fed funds rate at this point, and so I don't think there's going to be the same pressure to keep pushing rates higher. That said, with home prices as high as they are, every increase in mortgage rates is going to be felt by home buyers, and so we are likely to see home sales rebalance to maybe a slower pace, certainly than what we've seen in recent years.
Back to your excellent point earlier about rental costs accelerating as well, making the cost to own a home perhaps less onerous than we might all imagine in the relative scheme of things. Can you dig a bit deeper than the headline number and talk through where that dynamic is playing out most profoundly at the regional level in the United States?
So if we look at the areas that are seeing the biggest home price increases, whether it's home prices or rents, it's typically in the Sun Belt. Many markets in the South, Florida especially, has seen substantial rental growth. Miami was our #1 market in the most recent rental data. And that means with rents rising, home buyers are really motivated, but at the same time, home prices are rising and mortgage rates are rising, making those costs higher. So people are kind of stuck in between those two markets. And we're seeing with low inventory and low availability of homes for rent, it's likely that prices are just going to go higher for both renters and home buyers.
Is this a market, Danielle, that needs to be calmed?
We definitely have a mismatch between demand and supply. There are two ways you can fix that. You can cause demand to pull back, or you can figure out ways to get the supply to meet that demand. It's an open question about how, what's the best way to tackle that. But it does seem like the Fed's best ability to try to address that is by raising rates, which is likely to hit demand.
Can you talk to us a little bit about that supply? Where are we seeing the greatest restrictions or limits to supply over the course of the country. And how might that change going forward? Because I'm struck by this notion that maybe supply is also constrained by pure inflation. If Fed can get inflation under control, we could actually see some degree of supply reprieve.
Yeah, that's a good question. So it's hard to say how much is pure inflation versus supply chain challenges that we know are ongoing in the wake of the seismic economic shifts that we've seen over the last couple of years. If you look at housing construction, for example, housing starts numbers were up pretty substantially from a year ago for both single family and multifamily. So that's a good sign. The challenging thing is that builders have a hard time pushing those completion numbers up as much as the starts numbers. So that suggests there's some supply in the pipeline, and we just need to get that construction finished and out to the market so that buyers and renters can both take advantage. But as you noted, builders are facing rising costs as well, particularly on the labor side of things and material side of things. So getting inflation under control will certainly help them get to market at a more reasonable price point.